Hello everyone, my name is Adnan, and I hope you guys are doing great in this lockdown period, or whatever the quarantine period as you call it. I'm doing great as well, trying to do productive things every time. Uh, so, yes, I like teaching, and I thought while I was teaching a few of my students, I thought I'll just, record summary videos which will be convenient for them for revision purpose. I'm just going ahead with that. So I'll be recording today a summary lecture on the chapter banking, which is mainly applicable for class 10 ICSE syllabus, where actually anyone can do it for knowledge purpose if it is not there in the syllabus. And if it is there, so it's good only. You can just go ahead with this video. I hope it helps. It's just a small effort from my side to give you the best which I can provide. So let's just start. I'll just start by talking about the manners in which banks operate and what are banks basically. So banks are basically financial institutions, and they have mainly two roles: accepting deposits from the people and advancing deposits to people. Let's say there's a person, a salaried person. He earns a salary income of rupees 10,000 per month. Now he spends 9,000 of it and he saves 1,000 of it. What he can do is, banks are safe organizations. He can accumulate his savings in the bank, and and the money grows actually while keeping in the bank. How it grows, I'll be talking about it in some time. So you may argue that why keep it in banks and not at our homes. See, certain things which we don't want might happen. It might get stolen. The world is a cruel place, so you just can't rely on everyone. So banks are generally safer. I'm not saying that there are no thefts occurring in banks, but comparatively they are safer, and it gives you a sense of confidence, since money is a big thing for a middle class person. So that is the whole context of my discussion. I was talking about the main roles of a bank. So it is accepting deposits from people and advancing deposits to people if they require the same. Also, banks have other functions like, for example, you are a really busy businessman and you don't really have time to make payments for your sons or daughters school fees payment, or rather the electricity bill of your house. So what you can do is just give a standing instruction. Please put emphasis on the term standing instructions. It is a term which is widely used in the banking industry. I may just give a standing instruction to my bank. I may tell the authorized person, that please don't ask me, deduct this much amount, which is the monthly fees of my son. Say 15,000 rupees is the monthly school fees. So I'll be really busy with my business trips and all, so I don't really have time to sit and actually make the payment. And my wife is also a housewife, and she's not so tech savvy. Or actually, the chapter banking is a traditional chapter. We are talking about it in a traditional perspective. Now we have the concept of internet banking, but still a lot of people are not aware about it. So still conventional banking happens. So in that manner, if a conventional businessman who is not so prone to internet banking, which is very hard to believe in these times, he wants to give a standing instruction, being busy in the business activities, so he might just give the instructions to the bank, stating, please deduct the school fees of my child, say rupees 15,000 per month, because I'll be really busy and I don't want it to get delayed. Or rather, the electricity bill of my house, which is say rupees 3,000 per month, and please do the same. So bank charges us some amount, some bank charges. Obviously nothing is free for in this whole world. Not even a leaf moves without money. So banks will obviously charge for it. They are not doing charity. So they will give you the service, provide you with the service, so that you also rest assured you are busy with your stuff, and they'll take care of all your payments and all. So this term is known as standing instructions, which is also a major role provided by banks. Also, if you need to pay income taxes or indirect taxes, banks provide those facilities as well. Locker rent, you can keep your jewelry in the locker, and also you can take loans from the bank in case you need funds. But definitely banks will charge the interest. I'll be talking in a lot of detail about interest, what exactly interest is. And the thing which I was talking about, that money grows while keeping it in a bank, it is related mostly to the concept of interest. So that I was discussing the roles of the banks. So banks can provide you with loans and charge interest on it. Also, they can accumulate your savings and give you interest on it. Also, they can provide you locker-in facilities, and you can give standing instructions to them, which I just discussed about. And there may be a lot of things to discuss, but these are the main things. So now coming to the next topic, interest, which I just mentioned that I'll be talking about it in detail, which is a widely used term in financial industry, the finance industry, which the whole economy revolves around the term interest. So I'll just, at your level, you just need to have a basic understanding of the term interest. So I'll just keep it up to that. So what exactly is interest? Say you deposit a sum of money into the bank. You may have heard of the term investment. What is investment? If you have a idle sum of money that you have kept aside, you can deposit it into the bank or anywhere maybe, or any not just banks, you can invest it anywhere. We often hear the term investing. That means the mechanism by which we can grow something which we are putting forth to someone. So people also use the term investing in education. What does that mean? That I am giving my efforts towards education, hoping that I will capitalize on it and it will give me some benefit in the future. So talking completely on a financial perspective, interest is something which will give you benefit on a financial perspective. So if you deposit some money into the bank, they will provide you with interest. Now, why will they provide you with interest? You may argue with the bank that I am blocking my whole funds and keeping it with you guys. I might have invested it in a foreign country, or another government schemes in which they assure us to give us more money. If I deposit 1 lakh, government ensures that I will provide them with the government ensures that they provide us with a more sum of money, say 1,10,000. So why do I block my money without getting nothing? So banks say, yeah, we'll also provide you with interest. So 1 lakh rupees you deposit into the bank and bank pays you 10,000. Now, how does the bank get interest? How does the bank get the audacity? I won't use the word audacity, but how is it financially viable for the bank to pay interest to so many people? First of all, I also mentioned that banks give loan to people, and also they charge interest on it. That means people have to pay interest on that sum. So that interest income is a source of the interest that they will be paying you while you deposit some sum of money into the bank. Also, banks generally make a very good investment abroad, or in maybe in diverse sectors, and earn a huge amount of money. Say you deposited 10,000 and they took your 10,000 and deposited it somewhere else and earned around 5,000 rupees. So total they earned 5,000 rupees, and out of that they will just give you say 1,000 rupees, 2,000 rupees. So ultimately the profit of bank is 5,000 minus 2,000, 3,000, and they give you 2,000. So you're also happy, bank is also happy, and the economy is going on that way. So this is the whole concept of interest, the basic concept of interest. Actually, there is a lot more to it. This is not just this is just 0.01% of it, but I'll just try to keep it simple so that it is clear for you guys to understand. So interest is generally something which a sort of benefit, a financial benefit which we get or which we have to give in case we take funds from someone or we give our funds to someone. Something extra. Nobody is doing charity. You have to earn to make a living, and everybody has a family, so they have to make a living out of it. So that is the whole concept, the whole banking mechanism which I just discussed. Now coming to a very important concept, the concept of check. Check is nothing but a kind of pro forma, a kind of statement issued by a bank by which you can demand your money which you have deposited into the bank, either in the form of cash. For example, you have deposited 10,000 in April 2020. Now you want it in May 2020, so you'll just write a check. I'll discuss what a check is. I'm just giving you a brief example. So I'll just write a check of 10,000 which so that I can get cash which I had deposited in April in May. Also, if I want to transfer funds from my account to someone else's account whom I want to pay for any obligation, so I can transfer that way. This is also a major function of role of banks which I missed out earlier, that banks also facilitate in transferring funds from one account to another, or one place to another, or be it one country from another. There's a lot more to it. This is just the 1% of the concept, or rather 0.01% of the concept. I hope you guys are interested and you'll get to learn more about it in due course, but this will suffice suffice for the current time. Okay, so I was just discussing the concept of check. So check is an instrument issued by a bank by which you can demand the money which you had already deposited into your account. Now checks are of three types. Out of the three, two are almost redundant. Nobody uses it because they are less secure, and one is widely used. The two which are less secure are bearer check and order check. And the third check which I am talking, which is very secure, is a cross check. So a bearer check is a check in which if a person whom you provide the check with goes into the bank and gives the check to the person on the counter, he will without any question give the money to the person. So a bearer check is a check in by which by providing the check to the person on the counter, you are entitled to receive the money. The second less secure check which I was talking about, comparatively more secure than the first one, bearer check, is an order check. Order check, only a person is entitled to encash an order check only when the name of the person is written on the check. Now, how will the person identify that this person's name, the person whose name is written on the check is the person who has come to collect the money? They may ask for some ID proof, and as I said, it is not safe and people might forge it, but that is why I just said it is less secure and almost redundant. Hardly people use it, but it's just a conventional method, conventional chapter of banking which we are discussing, and that this is a part of our curriculum. So that is why I just gave a brief idea about it to you guys. Also, now coming to the most secure one, cross check. Cross check is widely used in today's by everyone. Mostly 90% of people use a cross check. Rather, the number is significantly increasing. It depends on person to person and their knowledge about the same. So a cross check is where you put two parallel lines on the face of the check and write account payee on the between the two parallel lines on the face of the check. So how is that safe? The account number written on the check, the money will go into that account itself. The person who has gone to encash the check is not entitled to get the money by any means. So the money will go into the account number which is mentioned on the check. Now you may argue that a person might just change the account number or do any correction or any change in the check, which is a very safe instrument. So let me tell you guys that it is not so simple. What you need to do, banks, the person sitting on the counter, to encash the check, has been instructed by the authorities. If there is even a slight bit of overwriting on the check, or it seems that there is indication that there might have been correction or changes in the check, they won't encash the check. They will ask you for another one to present another check, another account pay check, or rather a cross check. So it is actually not that less secure. It is actually a very secure thing, but as you know, we are living in a society where people are always after things to what do I say? I think you guys understood what I'm trying to say. So yeah, let's not divert into all that. So my basic purpose was to make you understand the three types of check, which I think I did. Now talking about the different types of bank accounts. So we have a wide range of bank accounts which I'll be talking about. First, let me talk about savings account. Savings account is the most widely used bank account in today's banking industry. Mostly everyone, not everyone, maybe still there are people who don't have it, but it is mandated by the government now to have a bank account, and everybody has also understood the importance of the same, and they have opened a bank account in their name, and majority of the people have savings account. What is a savings account? So this is an initiative, or rather a scheme by the banks by which they inculcate the savings of the people who have opened the bank account. They provide them with a sense of confidence that they deposit a sum of money as their savings into the bank account, and just keep depositing the same for a regular interval, so that there a huge chunk of money accumulates over a period of time, and ultimately it will be giving advantage to the account holder. So also I talked about the concept of interest. So obviously the person will getting interest on the same, but yes, it is not a very high amount, it is a very low amount. And also let me share with you guys for knowledge purpose that the lower the interest rate in a country, the better developed the country is. So you may find developed countries like US and all having less interest rates compared to developing countries like India. This is an economic thing which I think when you guys opt for economics in your higher classes, you will study in depth. But this is just for your knowledge purpose. If you just are talking with your friends and you want to sound a bit more intellectual, so you might just use all these things. Okay. So yeah, that's it. And so I was talking about savings account. So savings account inculcate a sense of savings into the minds of the people, account holders, and also your money is safe. As I was discussing about the salaried person who saves a part of his income and deposits it into the bank account, he gets interest. Now interest is given in every quarter. There are 4 quarters, as you must be aware, in a financial year: April to June quarter, July to August, September to December, and January to March. So there are 4 quarters. One quarter comprises of 3 months. So every quarter you are provided with a sum of interest on the principal amount, which the minimum balance actually. There is a concept of minimum balance which you need to maintain with every banks. It may vary from bank to bank, the concept. Some banks also provide you with the facility of zero balance account. You don't have to maintain any minimum balance, but you have to keep making. But the banks having a concept of minimum balance also have a concept of you have to keep doing transactions into the account, or after some point of time your bank account becomes completely dormant. So you have to ultimately close it and get the proceeds, the account balance which was last there, and then you get the whole money, but your account is closed. So you need to keep your account a bit active. So this is the whole concept of savings account, and this is the most popular accounting scheme which people opt for. Now there's a concept of current account. Current account generally is used by business entities, big companies who are only mainly maintaining an account for commercial and business activities. Now interest is not credited for current accounts, because interest is only provided to give to promote people, to catalyze people to save a sum of money. And current account are generally only for business transactions. They are not encouraging people to save a part of their money and keep it in the bank account. They're only for business transactions. Suppose you sold a good to someone, your customer, and he wants to make the payment. So he will make the payment in your current account, not your personal bank, the savings account which I'm talking about. So all the business transactions take place within the current account. So the difference between savings and current account, I hope, is clear. Now talking about time deposit and fixed deposits. Fixed deposits are actually, so say you won a lottery of 10 lakhs, sounds good, I know, but it's come out of the big dream. I hope you guys get lucky, but let's just talk sense. So suppose you win a lottery of 10 lakhs and you have your son's marriage, or your son wants to go abroad, or daughter wants to go abroad to study, say in Australia, and you will be needing funds after 5 years. You don't need the funds right now. So instead of spending the 10 lakhs, an insensible person will spend the whole money, lead a really lavish life, go to a 5-star restaurant, have dinner. I have won the lottery amount, let's just spend it. So I hope a sensible person won't make the mistake. What he'll do is he'll go to the bank, and if he asks the person, the consultant, he'll just always ask the person to deposit the whole amount in a fixed deposit account or a time deposit account. So, and generally these amounts are big amounts which you deposit in a fixed deposit or time deposit account, and also the interest provided on the same is more than the savings account. If let's say 5% is the interest on a savings account, rather 4.75%. I think my bank provides me with 4.75% if I am quoting it correctly. So let's say in a fixed deposit you will get 7 to 8% interest, and it might get reduced as and when the country is developing, because remember I told you whenever a country develops the interest rate goes down. So yeah, so it will provide you more interest. And say you deposited the 10 lakhs which you won in a lottery today in 2020, and on 2025 it is your son which wants to go to abroad for higher education. So let's say you earn an interest of, if it's 8% per annum, so you'll earn 80,000 every year, and accordingly, say roughly I'll talk about it, you'll earn an interest of 4 lakhs. Correct? So total amount after 5 years which you'll get is 14 lakhs. So you see, if you would have spent it like an insensible person on the very same month in which you had earned the lottery, you would have lost the whole money, and your son's education, your son's marriage, whatever the purpose is, would have been at stake. Instead, you are getting the 4 lakhs extra for keeping it, being patient. You are being rewarded for being patient. So 14 lakhs you are getting after the end of 5 years. So that, I don't think it's a very bad deal, but obviously it depends on the patience of the person and integrity, not integrity actually, financial soundness of the person, as I must say. So this is the concept of time deposit and fixed deposit. Also, I forgot to mention about the concept of passbook. Passbook is nothing but a statement which is provided by the bank, which keeps a record of all your transactions. Say you deposited 10,000 cash into the bank, so your passbook will show that on this and this date 10,000 has been deposited into the bank account, and you withdraw the very after 10 days 5,000, so again the passbook will show that 10,000 was deposited on this and this date. Then again after a few days 5,000 was withdrawn, so ultimately the balance of is 10,000 minus 5,000, that is 5,000. So ultimately it keeps a record of all your transactions, so that if you want to refer to it after, generally people who file their income tax returns and all that, they need it for keeping the record purposes, and there might be many more uses of it. If you go for a loan also, the banks might want to see a record of your bank transactions. It may be you may need it in any sphere. So that is the whole context, that is the whole thing which I wanted to convey. So a passbook is nothing but a document which will keep a record of all your transactions. Now I was talking about the different types of accounts, and I think I mentioned a few of them. The next is a cumulative or a recurring deposit account. Now this is the concept which is going to be tested in your examination, and it is very important, practically very important for examination purpose. Rest all which is concept building stuff. So yes, I'll be talking about it in a more precise manner. Now recurring deposit is something in which you have to deposit a fixed amount of money at every consecutive period. For example, you go to a bank and say, let's say again let's take an example of a salaried person. You are very sure as a salaried person that you will be able to save 1,000 rupees per month at least, and so what you want to do is, and that you don't have any specific use of that 1,000, you are utilizing, say you have a salary of 10,000 and 9,000 you are spending it, 1,000 you don't have, say 8,000 you're spending, 1,000 you're keeping for meet the you're going to a restaurant to eat probably on a weekend, going to a movie. 1,000 is sufficient for 1,000 rupees is sufficient for for leading a lavish life. I'm just talking, it is a very it is a matter of speculation, and it may depend from person to person. So talking about a salaried person, 8,000 he spends, 1,000 rupees he leads a lavish lifestyle, and 1,000 rupees he doesn't have any use of it. So what he does, he is financially very sound, so he wants to save it every month so that it accumulates and gives him benefit in the future. So the person goes to the bank and talks about it to the consultant or the person sitting on the counter, or who is the authorized representative. Every time you'll find a person who will be guiding you. He will be sitting there and he will guide you for all the schemes, but definitely you also need to have the knowledge of the same. You just can't rely blindly on anyone. Okay, so yes, of course. So let's say you discuss with him and he said, yeah, I'll open a recurring deposit. The word recurring means to repeat. The word recur means to repeat, and cumulative means, the cumulative word actually comes from the word accumulation, to gather. So you discuss with him and he's like, okay, I'll open a recurring deposit account for you. You deposit 1,000 rupees every month, and you can do it for say 5 years. You chose I'll do it for 5 years, because you're sure that after 5 years I think it will be enough for me to deposit it, and then I want the withdrawal. So yes, so ultimately what you're doing is you're depositing 1,000 for every month. So in 1 year you have accumulated 12,000. For 5 years you have accumulated 60,000. So what do you think? You'll just get 60,000 after the 5 years, after all this discussion which we had? Of course not, right? So we'll be getting what? Yes, I can hear you guys, it's interest, definitely. So you'll be getting interest on the same, and that is the practical question that we are expecting in the examination. And it is a very complicated, not a very complicated formula, but a difficult to retain. But as you practice it, you'll be fine with it. So every month you deposit 1,000, 1,000, 1,000, 1,000, 1,000 for 12 months. 1 year complete, again 1,000, 1,000, 1,000. You do it for another year. You do it at 5 years. Now, disclaimer which I want to give you guys: make sure that if you're opening a recurring deposit account, you have the same amount there in your bank account, because every month, again, this is a type of standing instruction which I was discussing what a standing instruction is. So a bank will, without asking you, deduct on a specific date 1000 rupees from your bank account. And if you don't have the sufficient balance, your bank account balance will go negative, and again bank will charge of their bank charges, which may be a high amount. So better be careful about it. Plan it really well. Planning is very important if you want to prosper financially. So 1000 you have to keep a fixed sum on 1000 you have to keep a deposit of fixed sum every month, and so ultimately you'll accumulate 60,000 after the end of 5 years. Now, how is the interest calculated? Let's say recurring deposit account gives me 6% interest per annum. So I'll get 60,000 certainly I'll get, 60,000 certainly I'll get, and the interest component I'll need to have it. It will be calculated. So let's say the interest percent is 6% as I was discussing. So the formula for interest is the monthly deposit which you are making, that was 1000 rupees into number of months for which you are making the deposit. How many months? 12 months into 5 years, 60 months. It is very important for you to understand that if there is years given in the question, you need to convert it into months, because we are talking about a period which is months in your case. In academically, months is demanded from you guys. So you need to convert years into months. Don't by mistake take 5 instead take 5 instead of 60. You need to convert the 5 years into 60 months. So the formula is, I'll just you guys can note it down if you want to. So the formula for interest is principal, the fixed amount 1000 into n plus 1. N is the number of months, divided by 2 into 1 by 12 into r by 100. So n is the number of months, 60 months, divided by 2, so 1000 into n plus 1 divided by 2 into r by 100 into 1 by 12. 1 by 12 is because basically to keep it in the monthly calculation, and r by 100, since it is in a the rate of interest is in a percentage basis, you need to convert a percentage into fraction, you need to divide it by 100. So that is why it is coming, and ultimately there is a derivation of n into n plus 1 by 2, which you can derive from the chapter geometric progression which you are having in your syllabus, which I'll be talking about it in a different video probably, so I won't divert right now, but you can derive the same formula from GP. There's a chapter in your syllabus, you can check it out. So the formula is, I hope, is clear. The principal amount was very clear, 60,000, 1000 every month for 5 years, 60,000, and the interest is 1000 into 60 into 61, because the formula was n into n plus 1. So 1000 into 60 into 61 divided by 2 into 1 by 12 into 6 by 100, because I had taken the rate of interest to be 6%. So let's say I'm not calculating the interest. Let's say the interest amount was whatever, say it's 1500. So ultimately the amount which you are getting after 5 years is 60,000 for sure, because you had deposited that, and the interest component is 1500. So ultimately you are getting 61,500 after 5 years. Actually the interest amount would be more. I just give you a brief calculation so that we don't waste our time on calculating all that. 61,500 is what you'll be getting after 5 years. So I think it's a good thing, a good mechanism by which you can invest your money and grow your money. So I hope now we are clear that how we are able to grow our money by depositing it in the bank. And the main questions that you can expect in your examination are these type of questions based on recurring deposit account. The formula I'll be repeating. The amount which you'll be getting after 5 years is a maturity value. The maturity value is equal to principal plus interest. The principal is the fixed amount that you're depositing every month into number of months, plus the interest amount. I'll be repeating the formula of the interest. The formula of the interest is the fixed amount, let's say x into n plus 1, by n is the number of months, so I'll be repeating again, x into n plus 1 divided by 2 into r by 100 into 1 by 12. So this is just the interest amount. Whatever amount comes, you add it with the principal amount which we had calculated 60,000 earlier, and this is your maturity value. So this is the way by which you have to solve all the practical questions which are relevant for you academically. You may practice questions and you may get conversion with the formula in a very simple manner. It is a very simple process, but it may sound very complex if I'm speaking it right now. But you'll see that if you are solving 3-4 questions, it will be very easy for you to retain it. for retention purpose. So that's it. I hope I have not missed out on any topic, and if I have, you guys can just refer your book, and I hope this video helps, and it will be beneficial for you guys for division purpose. Thank you. Bye bye.